Ladies and gentlemen of the crypto space, we're live on Wednesday, February 19th at 11:30 a.m. Oh, I kind of left this screen. I, I don't like talking about popular shit, but this is clearly one of the most popular things going on right about now, and maybe it is unintentionally a decent way to start the conversation. You know, so many folks are absolutely annihilated from the meme coin space. And for a long time in 2024, relatively derogatory terminology was thrown around about dino coins, the old shit. It was never old shit. It was just stuff that people didn't understand. Stuff from a different day and age in a galaxy far, far and away, or a long, long time ago. Yeah, all the way back in 2020 and 2021, talking about like it's ancient history or something. The dreaded word utility. The, utility is the stupidest phrase, only matched in stupidity by the word um, altcoins. It has the depth, it is shallow, it has the depth of a kiddie pool. Utility means nothing. You'll see it thrown around on social media. And pretty much anyone who throws it around with, unless you know the capacity of a person, their talking points. If they're just throwing around that particular word, or even throwing around altcoins for that matter, altcoins and utility, it's just utter bullshit of understanding nothing about how any of this works. Now, obviously, there's a mimetic component to Shadow. There's the whole Sonic narrative, the whole Andre redemption arc, and prices that go up quick tend to not stay up. They tend to be cyclical. You know how many folks are in profit? Folks waiting for like their 2 week vesting, and they. But this is interesting to say the least. There's a bunch of takeaways. You know, hype and exuberance are things that I don't consider. So what I take this as, this particular chart, is that there's something significant to Sonic, something meaningfully significant to Sonic. History considered, phantom precedents, Andre development capacity. Everything is overshadowed by not stigma, but the fact that a lot of Andre's projects didn't work out so well in a production environment. But yet again, that wasn't the appropriate takeaway. Malinvesting in a test and prod. What is the expectations? But time and time again, Andre's tech has proven to be game changing in many regards. Came up with Yearn, Keeper, Phantom, solidly. All of those systems are like base layer infrastructure to these financial markets in so many regards. He is a key contributor to all the financial activity that has and is occurring in these crypto markets. So clearly we're in relatively exuberant territory. This is the hourly chart. You don't have daily candles like this unless, was that 300% in a day? 3 days, 300% in 3 days. Now, bear in mind, there's a lot of points to consider. First and foremost, um, acquisition, liquidation. What is the significance of this asset in the context of capital management? It has a technological um, significance in the context of Sonic. It's where all the financial activity is occurring, and that tends to carry weight and momentum, meaning once something is known as a destination for activity or slash a behavior, it tends to remain that destination. So even if, like Andre has been mentioning, he wants to launch something, he wants to take out the solidly exchanges. All right, that's an interesting statement. Tech does get disrupted. It requires a meaningful event. It requires it is very difficult, if not historically unreasonable, to expect a disruption to disrupt an ongoing disruption. It's very rare, which is when we talked about like Velodrome and Aerodrome overtaking Uniswap. That type of thing is very rare. Um, so even in the context of Andre's talking points of introducing some more meaningful tech, that's just not the way humans work. Um, I think that's a good point to make. Anyone saying anything about this topic? Yeah, Arrow says I think he's on good terms with Kingdom Team, though. No, I have no idea. But see, as a third party, we must realize that it's irrelevant. We can only conjecture, and conjecture is meaningless with regard to anything and everything. So it's irrelevant. What's pertinent is that Sonic is live. It has a fair amount of dollars, and people are transferring capital to it, and they're engaging in financial transactions, and it has Stargate and Crosscurve AWA integration. So there's great bridging technology that is facilitating seamless liquidity transfer. And this is the destination for financial transactions on Sonic. That is a open shut type of conversation. There's no ifs, ands, or buts about it. We're clearly seeing that play out. Momentum continues, moats build, windiness builds, and right now Sonic is being dominated by Shadow, which is pretty cool from a Kingdom perspective. Yay! Because obviously the Kingdom folks all got an airdrop of Shadow, and it wasn't small, so that was nice. So there's probably other questions like, would I buy this? No, you don't buy something like this. You don't buy a token that's up 300% in 3 days. That's crazy. That's called malinvestment. That's called chasing. Um, that's called greed. So obviously, a lot of my talking points are centered around the idea of having gotten an airdrop, and that's cool. That's okay. There's plenty of different considerations, including do I take a 50% haircut and liquidate? What is my response to that? It is completely contrary to my capital management philosophy. Grateful to have exposure to it because of Ramsey's exposure. So it will be productive to whatever extent it is productive. It will be valued at whatever it's valued. And my mind is what's Sonic? Where's Sonic heading? Where's Sonic heading into 2030? And that's a pretty interesting thing to consider, considering the strength and momentum and innovative capacity of Andre. So that's promising. Um, I like thinking those things. So this is something owned, not a position to be sold. For me, as I define it, and that you must make your own definitions. You must chart your own path. You must know who you are. You must set reasonable expectations. But Jesus Christ, look at this goddamn chart. Holy shit. I mean, seriously, the airdrop is worth over 10x the position size in Ramses. that it was dropped for. So if you had X amount of Ramses, you got X amount of Shadow, and that is up 10x in value. So that's cool. Revenues are pretty good. Um, Voting flows. Here, go to stake. Look at this. This is crazy. That's crazy. So 3 mil in a pending repay, 74% in a rebase. And I have not claimed, I'm not going to go over to the dashboard that everyone sees my airdrop. So we don't need to see that. But if you go over to vote and you go sort vote APR, I don't even sort vote APR anymore. I don't give a shit. What I want is the rewards because it's a relatively large position size. So there's $314,000 worth of rewards. Shadow, that's cool. That is interesting to see. The most rewards are for Shadow. Um, kind of votes are in 190,000. 50% of votes are in 1.3 mil. So this is interesting. We'll see how this balances out over time because obviously these shadow solidly exchanges are disinflationary. So, but it'll take some time for the epoch emissions to be less than the vote rewards. But that is pretty much a destination. Even Ramses has that. I probably still, I believe, I'd have to check, but that's not what we're talking about at the moment. So if I opt for like a Sonic USDC, so I don't expect that kind of voting reward. That's just gross. Um, let's say it gets cut in half. We're at about 50% of total votes. That's still pretty insane given it was a free position. So I'm kind of over the top ecstatic that this is an addition to the portfolio, something to be happy about because we did our due diligence. We had our exposure to Kingdom. We have our exposure to Velojo Merit. We have our exposure. We built all this exposure based on all these talking points we've discussed over the years. This is literally just the result of the conversations that we've had over the years and what we constructed with regard to a portfolio. It's not a it's not a coincidence. This is a direct repercussion of the talking points we've considered and how we've chosen to build our portfolios. Fugu, hello, sirs. Era, morning, Sana. So let's see. 37K TVL. This is a nice little airdrop, 83,000. Let's see what. If this thing launches at $1. Oh, claim started. Oh, it only has 37 TVL. I will look into this later, but that's a hell of an airdrop. If this thing starts at $1, I'm just gonna be like, what the fuck? What's going on? That'd just be gross. Fugu facts, much a pleasure. Joel in the house, good morning, Cap. Solana dried up and folks are migrating. Well, that's part of the equation. That's what Arrow and I were talking about last night. If you go over to stables, because I don't give a crap about TVL, and we go over to Solana, shit, $1 billion has been drained out of Solana week over week. All the meme coins people have capitalized, they're all obviously completely decimated. Okay, so all the money that was taken, stolen, taken, um, is flowing off because all that capital was just extracted from people. And now it's going to other places and it blends into other economic systems. It flows, which is called a monetary velocity. And where's it going to flow to? It's going to flow to the crypto space, EVM chains, or non EVM chains for that matter. But Ethereum mainnet clearly, let's see what's a positive sum environment today. All right. Plus $640 million week over week. Base just completely flat, zero sum environment. $3.4 billion, give or take. Flat finally. Finally starting to find bottom, maybe. Basically a zero-sum environment. Same thing here, zero-sum environment. Avalanche, marginally negative sum. Optimism. Oh, goodness gracious, another 10%. Damn it. And no info on the Bera. Let's see what data we have on Sonic so far. Well, okay. Microscopic market plus 32% week over week is a monumental change in currency supply. I mean, you see that on mainnet. You get like a $30 billion inflow week over week on mainnet, and things are going to get gross. But that's exactly what you're seeing here. When you have a double-digit percent change in currency supply in a market in a week, things get disgusting. And this is the same talking point with regard to nation states, and you know they're increasing the currency supply. All right, you get inflation, you get consumer price inflation. That's exactly what's going on here. By definition, this is called consumer price inflation. 32% increase in currency supply in the sonic market is causing consumer price inflation. There's no if, ands, or buts about it. See how Linnaea is doing. I haven't checked on that in a bit. All right, flat, microscopic, just like Sonic. Let's take a look at DEXs. Do we have anything for Sonic yet? Um, WAGMI in the lead, but jeepers, that's a 92% week over week increase in volume, significantly more TVL. WAGMI putting in significantly more volume to TVL, which is an important takeaway. $184 million worth of financial activity in a week, with a fraction of that total, 70, 50% less total currency in the entire market, which is pretty interesting to say the least. I mean, $48 million worth of financial activity in a day. This is a microscopic market. If you go over to mainland, you got $2.63 billion in single day financial activity. Even base is coming in at a bill, 750 mil at Arbitrum. Not Thorchain. OP mainnet, 91 mil. These are so incredibly microscopic, these markets. But take a look at that. Velodrome still 300% more volume compared to Uniswap. That's remarkable to see. If we go over to base, Aerodrome still on top by the same 300+% difference in volume. Aerodrome and Velodrome have dominated the Uniswap landscape. That is one of the rare instances where an ongoing disruption is disrupted. Absolutely remarkable to see in the financial world, yet alone anything, technology for that matter. Could you explain your opinion on the soft merger of Venus Protocol and Theta? 33% of the ETH will go to Venus, and also percent of the emissions. I don't know. It's cool. Um, my perspective is afforded by the fact that I have exposure to Theta. We'll see what the two of them could come up with together. See how that interplays with BSC and what Binance has said are planned upgrades. There's a lot of things. I mean, Binance Smart Chain is basically currently inferior to at least the Ethereum L2s. It's expensive and slow comparatively. So, all right. But last year I thought exposure to BSC. I was thinking in terms of exposure, and that's where my mindset was for a good part of 2024. And we opted for exposure. I opted for exposure to BSC, Linnea, Mantle. Skipped over a lot of the other optimistic super chains. Obviously, Fraxel, but that was just baking the cake because of historic Frax exposure. I had very little exposure to base. Spectra would have been an interesting exposure to base, but I opted to not have exposure to Spectra, considering just perfect alignment with curve federation and all. So it just wasn't necessary, and ultimately it was redundant. In any case, base is completely lackluster. It's completely flat. So there's nothing too interesting about base at all from a financial activity standpoint. And clearly, this thing, let's go over to Solana. This thing is literally imploding in on itself. A 10% reduction in total dollar supply week over week, and a 20% collapse in financial activity week over week. Solana is not a place that's going to be nice to a person's portfolio. Trends continue until capitulation, then they stop and reverse. Solana is a market where people are going to be looking for exit liquidity to get back any capital they have remaining at this point, considering everything that went down with meme coins. And they're going to do what with it? They're going to extract whatever capital they can, and they're going to get the fuck out of town. 20% week over week is, I guess, by definition, like an economic recession. That's not depression. You see a stock market collapse of 40, 50%. You're in a depression. But a 20% collapse in financial activity is a catastrophe from a financial market standpoint. You see a 20% reduction in GDP for the US. That's a catastrophe. So it just so happens in the crypto space, we literally see financial booms and busts on a week over week basis. Plus 30% financial activity on Sonic, minus 20% on Solana. You got a boom, an exploding economy. And here you have literally a cascading, collapsing economy. Not only in terms of expatriation of capital, which is moving capital off the chain, but also in internal financial activity. It's just an atomic bomb of with regard to financial activity, really. 20% week over week. Mainnet 10%. That's a recession of sorts. Base a 20% recession. Recession. Notice how I'm using these traditional financial terminology, so you get a better sense of what the fuck is going on here. These are called recessions, ladies and gentlemen. 3%. All right. You got a little bit of economic weakness. So this is interesting considering the significant capital outflow out of optimistic mainnet. So you might have capital outflow, but you still have relatively sustained economic activity, minus 3.5% in the context of a 10% reduction in stablecoin supply. That's an interesting takeaway. How does that settle? Sonic. Let's see. No wonder. Goddamn. So you see, this data means everything. Certainly, from a forward-looking perspective on what's to come in financial markets, if you see a 30+% increase in currency supply in the market and a 50% increase in financial activity, you are in an economic melt-up, which is what folks talk about in terms of like the stock market where it goes vertical or some shit. This is an economic melt up, not a meltdown. It's melting up. $127 on chat. That's absolutely disgusting. So understand these markets in terms of traditional financial nomenclature, and you'll get a better sense, one, of how these markets work, but also hand in hand how traditional financial markets work. 0% to, let me check, 70% of the portfolio. Oh my God, right? Right? It's just insane with the I'm not surprised. I looking forward to the rebrand of Tapioca. It's February. It's obviously the history of the protocol is plagued with delays, 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 and obviously complexity that we experience. But at some point, something will happen. I think that is a reasonable expectation. Notice how I always talk about things in terms of what is reasonable or not. And I think that's a reasonable expectation. I have no expectation with regard to pricing or consumption of the protocol, but I have the reasonable expectation that it will launch. Too many folks have spent too much time on it. Frankly, I still have the reasonable expectation that Ren V2 is going to launch. And I think it's a reasonable expectation. And that's what matters because as long as your expectations are reasonable, you're not setting yourself up for disappointment, and that's the whole point of sustainable capital management. Don't set yourself up for disappointment. Set yourself up to experience what is likely reasonable. Food for thought. Modern life, much a pleasure. Advice on a good friend. Well, this is the place for a different perspective on how to engage in the most insane financial markets on the planet, and certainly an atypical discussion of what the hell is going on in crypto. Um, we'll go over to TradingView and we'll look at some chart data and just saying in advance that the market looks lovely. We'll get to it in a second. The advisor, good morning, my friend. How are you? Eric, can you please talk about Michael's new protocol? I don't know much about it, but I obviously high level concept of impermanent loss. If you could cure it to a degree, that was old school bank course type concept. That was years ago. It's 2020, 2021 type conversation. But if anyone's going to come up with something potentially interesting, novel, innovative, yeah, it's Michael. So that's cool. And there's only one takeaway to have. He's launching a new protocol. And was that a leave curve? That doesn't mean anything. Everything is additive, everything is cumulative. Everything in crypto is a Lego that builds on something that builds on something else, and everything just is exponentially connected. The interconnectedness is endless. So those are that's simplest takeaway that I could possibly have prior to it launching, and that's all that matters. Ah, now this will bring us over to TradingView. That is a lovely question. Please feel welcome to join anytime you want. As I wish there was more questions like this. Please, if you're on X or on YouTube, please ask questions because that's what drives conversation, and that is the only way we make progress. No, the bull market hasn't even started. There has been no bull market in crypto. You have to go over to the DXY to understand that. You go over to the weekly on the DXY. I have this all charted up because we've talked about it so much. So a crypto bull market, that as I define it, is red guppies on the weekly. These are red guppies. Guppies are moving averages. Moving averages are basically averages of price over a period of time. Now, obviously, depending on what period of time you're looking at, you get different average prices. Notice the larger moving averages, the 100 in green, the time weighted average price in whatever teal, the 200 in red. Back here is the 50 in, well, this one that I'm pointing to, it's a greenish color. And then if you could see through, I could turn off the guppies and you could see the 10. 10 is this green line here. So these are all different duration moving averages, but when you turn on the guppies, you get basically a range of moving averages. And these moving averages tend to trend in directions. So they go up, and if they go up pronounced enough, they turn green. If they're flat, they turn gray, or if they're down, they turn red. So to really understand the concept of a bull market, which is really an episode of consumer price inflation in crypto markets, you need to see red guppies, which is a pronounced period of dollar depreciation. Why do we look for the red guppies in terms of the dollar for a crypto bull market? Because this is literally the period of when crypto went absolutely parabolic back in 16 and 17. A period of significant dollar depreciation. Now, it obviously starts at the top and it gets completely ferocious as the red guppies trend lower and lower because the market is expecting continuation of the trend until capitulation. So our episode here, 2016, 2017, leading into early Q1 2018. There's your bull market from then, and here's 2020 and 2021. And here's your double top in Bitcoin. It's just clear as day from a dollar valuation perspective. Here's your repricing of Bitcoin from 16,000. So obviously back in 22, Q4 22, Bitcoin bottomed at around what, 16,000, give or take. This is your repricing. of Bitcoin back to what, 30, 40,000, and then 40,000 led into the ETF launch, 47,000 around ETF launch. And here's your two episodes of bullishness in the crypto markets in 2024. Back at the beginning of 2024, we had an episode of airdrop season on Cosmos Hubs, what was that, Celestia and whatnot, and it was just so much hype about airdrops on Cosmos Hubs. And then obviously the summer of 2024, Solana was on fire, and I mean it's the antithesis of what we're seeing now with Solana completely imploding on itself with regard to financial activity. So those are primarily your two episodes in 2024 of quote unquote transitory bullish price action. And then obviously towards the end of 2024, what was it, November? Towards the election, we had the repricing of what social media would call utility, which is basically um, what I define as crypto fintech, which is actual business enterprise in these crypto markets, crypto protocols that actually have a balance sheet and cash flow and dividend emissions and investors, real investors, not gamblers and speculators, but people that actually can define the word investing because buying meme coins is not investing or buying a token. I would argue, bit of a digression. I would argue that buying a token to sell it later isn't investing. Investment. I mean, maybe it is to a degree, but like Stan Druckenmiller, stuff like that, the big boys, they buy and sell much more so than like a Warren Buffett type. So the point is, what is investing? Investing is really a rich investment narrative, a rich thesis behind the acquisition of something, why you own it, how long will you own it, will you liquidate it? So I really take that a step further because I'm an extremist, obviously, and I don't want to buy and sell. I want to own, and I want to own cash flow. So, but in traditional terms, I'm a dividend investor. Um, so that's my core, or that's the core of my investment thesis. And that's why we've talked over the years in terms of XYZ, how much does it cost, how much is it paying, and how likely will it continue to pay. So frankly, my two cents is this is a profound setup for these markets. Um, Obviously, the dollar punched below 107 over the weekend. It's back above 107. So this is why we get the stabilizing effect of a weakening dollar, and then the dollar pops up during the week, perks up during the week, and starts to put downward pressure back on markets. But at some point this year, with $10 trillion needing to roll over, they need to really ensure that there's adequate liquidity and, Mike Howell terms, to refinance that total debt outstanding. So this plays into some of the posts I reposted on X dealing with, you know, forward-looking liquidity conditions like TGA drawdown. TGA is going to draw down, and that's going to juice liquidity in the system, which is going to roll the dollar over, and we'll see how much it rolls over. Our debt market volatility indicator move, which is also further confluence that suggests we're heading into the most interesting period of 2025. DXY looking like it topped. I mean, notice just the red circles. The red circles alone are extraordinary. Very easy to overlook without this holistic, very zoomed out perspective on this entire chart. But this green line dates back to 1971. I'm not going to zoom to it now. I'm on the weekly chart, but suffice it to say, it does. So this is an invalidation. It broke above, invalidated. Did not breach above, rejected. Didn't even get close to reaching above, rejected. Broke above, significantly less pronounced than the episode in 2022, rejected. Note the time scale. We are inspecting something in terms of years. We're not inspecting what's going on this week. I don't really give a shit what's going on this week. I care about where we are this week in the context of the last years. So this breach of the 107.35 line in the context of the breach in 2022 is constructive to say the least. It looks like it's going to reject, and that is confluence along with the decreasing bond market volatility, where the move indicator also looks like it's going to reject, whatever reject means on the volatility indicator. But once we start to get below this green line, which is a historic, probably median line with regard to volatility, that tends to set the trend, meaning you get bond market volatility to collapse, and that facilitates the global AVI health factor, as we've discussed, and that increases the capacity of the system to print dollar liabilities, which rolls over the dollar. The dollar rolls over, bond market volatility continues to get suppressed, and you get that cascading effect where the DXY goes down, the move indicator goes down, and that's your bull market. That's your bull market, ladies and gentlemen. The quote unquote classic conditions where there is a crypto bull market. So there has been no bull market yet, modern life dating. It has not occurred. A bull market is 6 months of what the hell is going on. 6 months of this, of shadow at 133, up 100% per day the last 3 days, and it just keeps going for weeks and weeks, to the point where people are like, okay, it's never stopping. But by the time you're done after 6 months, the thing's up like 8,000% or something. That's a crypto bull market because capital is flowing in from outside these crypto markets. Investments are monetizing in these crypto markets. And folks really need to remember the potential for this, what people call a bull market or the next bull market, red guppies on the DXY, is significantly more pronounced from an investment standpoint as compared to 20 and 21. There was no investment thesis in 2020 and 21. People were just figuring shit out. But now there's an entire investment grade landscape of crypto fintech that is actual enterprise with balance sheets. It's no debt obligations, no OPEX, CAPEX, no human resource obligations. You literally just have revenue and the disintermediation of it, the cash flow of it given to its owner. So it really makes dividend stocks like REITs and whatnot paying out 3, 4, 5, 6, 7, 10, even 15% seem kind of silly in comparison to even consider. I mean, this chart's literally going up as we watch it. How the hell is this thing on? I'm just flabbergasted by this. I look forward to claiming some. I mean, this is just this. What the hell is that, ladies and gentlemen? What the? I mean, me and Arrow right now, and Haikatsu, who's also on our Discord, Seikatsu, are like, what the hell is going on right now? This is like awe-inspiring to say. 83% just on the rebase. And then you go over to the votes and the amount of rewards that is a response of financial activity, the cash flows just put this in REIT terms where you're REIT. You can't even put it into REIT terms. It's just gross in comparison. It's but it has REIT components because it's immutable. Well, this is more mutable than a lot of other protocols. This is now this is soft immutable, which is kind of the position that the entire kingdom has put its protocols in. But it still has degrees of immutable. Like once it's deployed, yeah, they could change it, but it doesn't change until they change it. So I talk about this a lot in my legal documents, what is truly immutable, like a liquidity V2 or a curve or stuff that Frax does, like where they literally tout immutability as a core attribute versus stuff that has an increased risk profile because of degrees of mutability. And there's risk considerations involved in that. But, this is a heck of a track record on what Kingdom team has built. I'm quite impressed to say the least. Hope that helps modern life. Much pleasure. The advisor, sir, what do you think about the new yield basis project by Mitch? I mentioned it a little earlier. I'm just very brief on it. If anything, that's heading down the line of Forex, because clearly different currency pairings are going to have different valuations and you want to mitigate impermanent loss on them. So it's the basis for like curve pools. So we're launching a new token, which gives the opportunity for new incentive systems. You got to remember the curve incentive system was built in 2020. It was literally the first voter escrow system. By definition, it's of equivalent innovative scale and scope. That's what Andre does. It's one of the original pillars of what has become crypto fintech. So I'm quite curious to see what comes of it, which is probably just as equivalent uh, that I'm looking forward to see what comes of DeFi.money and what they're working on. It all fits together, and I don't like to conjecture. I don't like to speculate. What I know is it'll be tightly interwoven with the Curve Federation, and that means it's additive, it's ancillary, supportive, interwoven, so on and so forth. And that's all that matters. That's all that matters. You don't have to think too much about it. I look forward to seeing it when it comes live. That is the simplest possible answer anyone could give. That's too rational. It's too rational. I can't take the rationality, ladies and gentlemen. One of the key tenets of rationality is to not drive yourself nuts, not overthink things, and make things as simple as possible. And that should do it. We need that DXY to crash down immediately. Yes. Um, I mean, when I hear the political talking points, stuff on, Fox, CNN, and the other networks, and stuff, especially stuff on X and social media, that's kind of what I'm looking for is the financial implications of all of these types of conversations. And it really all leads to either inflation of currency supply, deflation of currency supply, redistribution of currency supply. It's very interesting when, Scott Bessent, Treasury Secretary, talks. I always like listening to that. That's old school, like Jad and Yellen time conversation. I'm not too interested in Jerome Powell. Fed doesn't really pull many strings. It is interesting when they say, liquidity conditions because the RRP is their product. So, like reserve health. That is a major consideration when the RRP finally drains. Like, all right, and that's all this year though. The whole point is the RRP is going to drain, and they're going to have to figure out what to do with regard to bank reserve liquidity. And is the Fed going to participate in liquidity conditions to the same degree that they historically did? Or is Treasury going to take a more front and center role, which is likely the case? This is what Janet Yellen did with regard to skewing the yield curve towards the short end. And then you got the administrative policies. JD Vance knows all too well into how he's talked to Jerome Powell that the value of the dollar is too expensive to do fuck all about domestic manufacturing or domestic repatriation of supply chain. You want to do any of that, you got to get the dollar down. I mean, double digits down, 80s, 70s. So all of this is confluence for 2025, saying this is going to be a fun year, a very, very interesting year. This is the right side of the equation to be thinking. You got to number these streams, right? Come back to them and find them like this one. Well, we've been doing this for 4 years at this point. This gotta be 850 streams, maybe 900 at this point. I don't know. Someone do that tally on YouTube. I bet you it's closer to 900 at this point. I don't know. Maybe I'm wrong. But the whole point is not to number them. You'll watch them, the old ones, but once you come up with a thought or an idea or a question, we need to move forward. We're not supposed to move back. We want those questions to be asked during the stream. If you have thoughts or questions, ask them here and we'll talk about them. Other people have these thoughts or questions, and the more I answer them, the better one, I understand them, the better I could talk about them, and the better everyone else can understand them. So it just makes sense to think in terms of moving forward rather than back. But yes, I've had many folks over the years say they need to run through the streams a couple times to even begin to digest the shit we talk about. But that's all good. Everyone, it's just as the title of the stream. What was the title of the stream today? You must come to your own conclusions. You must chart your own path. And if you want something done right, do it yourself. Ain't that the truth, ladies and gentlemen? Absolutely insane era. Absolutely insane. Shadow chart, obviously. It's literally like encroaching on curve territory, which is like insane. That was what happened with when Tapioca launched. It was like also encroaching on curve territory. It's like, what the fuck's going on? So, but that's part of the. It's going to get weird. You're going to see this year, or when DXY rolls over, you get your red guppies and so on and so forth. Bull market conditions. Those are the types of things that happen. You all of a sudden have portfolio components that flip. You have complete portfolio recomposition because the market dictates what the portfolio is valued at. So what it's valued at right now is irrelevant. The market is going to change that. So the portfolio decides. The market decides. The market's in control. So it's going to tell you what your portfolio is worth. Very interesting. It makes me vomit and then it makes me happy. Every show 134. I can't. Oh my god. I Listen, it's irrelevant. The number's irrelevant. I care about this little button. This little button. You click it, and then you go to dashboard and you claim it. And that claim button is equivalent to doing a week's worth of work at a job. You get a salary and a paycheck working at a job, or you get a salary and a paycheck by clicking a claim button because other people put in the work. What these systems facilitate is the transfer of the output of work. Got to understand that people engaging in financial activity are putting in work. They're trading. They're actively trying to experience capital gains. That's a form of work, a form of financial work, really an expression of the financialization of the economy, which is not healthy from a societal standpoint. But that's besides the point. Point is, it's a form of work, it's productive, and we're taking a piece of that productivity. So sign me up. And that's really where the start of this whole journey started, in understanding, you know, dividend investing in the crypto world type of mindset. This was all peach shop analogy and buy a salary analogy. Buy a salary. People work for a salary, but we could also buy a salary. Now, sometimes that takes years, and that's perfectly okay. I've been waiting 5 years. I've been running since 2019, and I've been in crypto. Was it 2016 ish? Yeah, 2016. I remember 2016. Oh man, DigiBuy was killing it back in 2016. That's when ICOs were hot. What was it? The end of 16, 17 master nodes. Master nodes. I think I had like 30 master nodes at one point. Jesus. Oh my God, the things that we thought were good or investable. Albeit Syscoin did come out of that era. Syscoin is not bullshit. And that is old school masternode tech, and they have come a long way. Really long way. Anywho, Fugu. Tapioca will launch on mainnet, which is crazy as well. So much liquidity. Folks, this is probably one of the most important things that you won't hear many people talk about, especially folks that talk in hyperbole. Arbitrum, Base, Binance Smart Chain, Avalanche, Sonic. They're non-existent compared to mainnet. You go over to stables and you look at the amount of stables on Ethereum mainnet. The amount of stables on Ethereum mainnet is monumental compared to anywhere else. The amount of stable coins, dollars, and that's everything. That's the root inspection of the strength and depth of a financial market. The amount of stable coins that has flowed onto Ethereum mainnet since November of 2024 is more dollars than exists in the total sum of all other markets. And that is just the capital inflows into mainnet. There's been $40 billion that has flowed into mainnet since November 2024. You could talk about whatever you want, the $10 billion on Solana, the crazy shit going on Sonic, how awesome Base is because it's hooked into Coinbase. These markets are relatively non-existent compared to mainnet. That's just a quantitative statement of truth. That's it. Do you think after Linnea TGE, people will leave the chat? I got no idea. No idea, my friend. You know damn well that would be my answer. Uh, Anytime anyone ever asks me what do I think is going to happen, I have no idea. But that's the whole point. Nobody has an idea, and anyone says otherwise is full of shit. It's irrelevant whether they do or they don't. What's pertinent is you pull up the data and you see what it's doing. It doesn't mean anything with regard to like Nile exposure, consistent with other rules of our business operation. We own it. It is what it is. It's gonna be what it's gonna be. If you buy a position, whatever, you spend 5 grand on a position, a nominal size, and it becomes nothing. It goes to zero. Own it. You made that choice. We are nothing but our choices. Stand by your choices. Stand by the amount of work you put in, the due diligence you put in. You know, it's easy to conflate the statement own it with, or I'm going to own something, I'm going to buy a coin. But I'm saying it in terms of own it, like a social type of concept. When someone says own your losses, own it. That's a deep statement when I say it. That's what I mean when I say own these things. Own it. Like really own it. It's meaningful. This is meaningful stuff. The ownership of assets is an extension, is really the manifestation of economics, but it's an extension of who we are as humans. What we own defines who we are because it's a manifestation of our beliefs, our choices, so on and so forth. Ownership is meaningful. It dates back all of humanity. Concept of ownership is profound. Fugu, mind over work, most certainly. Well, what do they always say? Work smarter, not harder. That's an oldie but a goodie. Minor choppy audio. Yeah, I'm not surprised. I got shit headphones, but if I go like, yeah, it's got to be what it's going to be. I'm not necessarily going to get new headphones. I've had a couple of folks say get new headphones, but I don't make any money with this channel. There's no money here, so it's just I'm more than happy to continue talking though. Yes or no, in my opinion, if a thesis is invalidated. Okay, well, this is a good answer, and this is devil's advocate is always that's how you grow. Two components to your statement. If a thesis is invalidated, you do or don't have the capacity to make a choice. You don't have a capacity to make a choice depending on your own personal rules. You do have a capacity, for the contrary. If your personal rules say uh, liquidate under invalidation, liquidate. Um, and then you say wrong. So notice how we get into semantics here. That's maybe a takeaway from our legal work that we do on Discord. Wrong and right, those are subjective terminologies. What is wrong or right is going to be different for everyone. So I would say, in my opinion as well, there's nothing wrong with selling, especially when something is invalidated, just as long as it's consistent with your rules. Execute your rules like a machine. There's no emotion involved in capital management. Under this condition, do this. Under that condition, do that. Rinse, repeat. And the more robust your rules are, the more you'll know exactly what to do under exactly what conditions. And in that regard, there's no anxiety because you're literally just measuring your success in terms of how well you can follow your own rules. Just follow your rules. And then at the end of the day, like, how well did you do today? All right, I did good. I did exactly what I was supposed to do. Number one rule: own more assets. I stand by that one. Tell that to any kid, especially in their 20s. Own more assets. All right, great. Now it's a whole conversation of what assets. And rule number two: know when to stop buying shit. It's a good rule. It's a very high level rule. But at some point, you need to cyclically stop buying shit because the nature of economics is cyclicality. There's favorable conditions and unfavorable conditions. And that depends on a lot of factors, primarily quote unquote liquidity. Uh, when the market's starting to warm up and it's up 50%, you probably missed an opportunity to buy at the cheapest price possible. So that's the overarching rule: own more assets at the cheapest price possible. Now, obviously, this bleeds into like buy low, sell high type shit, but that's not the framing that I offer. I frame it very differently. And over time, hopefully, that framing um, results in an expression of a different perspective because that's what folks need. They sure as hell don't need to um, compare and contrast the way I speak with regard to my capital management philosophies to always doing is buying low and selling high because fuck no, that's the last thing I do. I want to be as hands off in crypto as possible with the revenue machine. It's hard to detach someone's mind. Um, well, you and me both. Um, I I just want to own more assets that pay me. Simple. It seems simple. The problem is the emotional component. And that whole addiction to total net worth, which is irrelevant, what's pertinent is how much cash do you have on Friday? Because that tells you whether you go into Universal Studios or a trip to some cruise line or some shit, or you're paying your mortgage or you're not. How much money did you make on Friday? Obviously, we're used to that from a working perspective. But if you could add to that by owning assets that also pay you on Friday, oh shit. Okay, buy more assets. Okay, I need money to buy assets. Okay, work, buy assets. Assets pay me money, buy more assets. Okay, over time, I've bought more assets. Over time, those assets that I bought are paying me more money. Rinse, repeat. Own more assets at the cheapest price possible that pay you according to the rules of X, Y, and Z. A very simple process that works best for 20-year-olds. When you have a decade to do that, holy shit. But I can't turn back time. I'm in my 40s now, is what it is. Sometimes you realize shit. You realize shit whenever you realize shit. And you can't tell a kid what to do. They got to figure their shit out for themselves. And that's really the title of the stream, ladies and gentlemen. You must come to your own conclusions. You must chart your own path. And if you want something done right, do it yourself. Wednesday, February 19th at 12:30 p.m. 161 people made it to the end of the stream. I appreciate each and every one of you, and you are now a little bit more rational because of it. It's only Wednesday. I'll see you again Friday. Don't worry. Keep your head on a swivel. Try and keep that anxiety under control. Don't worry too much. Take a step back, zoom out. It's all going to be okay. Catch you later this week. Peace.